Good morning, everyone. We're just giving it a minute or two for everyone to join in, and then we'll start the webinar. We see people come in. That's exciting.
We will just give 2 more minutes and we will start.
I think we have a good group right now, so I think we can go ahead and start.
Okay, perfect. Well, hi, everybody. Thank you so much for joining us for today's webinar on value-added tax and how U.S. companies can navigate international VAT obligations. As companies continue expanding internationally, understanding VAT has become increasingly important, not only from a compliance perspective, but also as a strategic opportunity to improve cash flow and reduce some of the unnecessary costs that come with expanding to new markets. We're all excited that you could join us today. My name is Taylor Kotis, and I'm the Senior Director of Sales for Layton USA, and I'm based out of our Boston office. I'll be your moderator for today's webinar. Joining us are Anna Pinto and Pedro Barbosa, two of our VAT experts. And today's session is brought to you by Layton. Layton is an international consulting firm dedicated to helping companies recover taxes through a variety of incentives. In the US, there are 4 main areas where we support companies. The first is innovation incentives. The second is commercial real estate incentives. Third is state and local taxes. And finally, international taxes, including VAT, custom duties, as well as tariffs. For our agenda today, we are going to discuss how you can boost your sales, navigating flows throughout Europe, managing complexity to unlock value, the 4 disciplines of VAT excellence, and finally, how a global partner for end-to-end VAT support can help make this a little easier for you. Before we jump in, I have just a few housekeeping items for today. So first, feel free to submit any questions that you have throughout the webinar using the chat or Q&A box. We are going to save time at the end for a live Q&A session, so that's when any questions that you submit will be answered. You are also more than welcome to book a meeting with us during the session if you have any questions that you'd like to discuss offline and in a little bit more detail. There's a button at the top of the webinar that you should see to allow you to book a meeting directly with us. We will be sharing a recording of today's webinar after the session via email. And then finally, if you have any issues with hearing the audio or viewing the slides, please let us know in the chat and our team will be able to assist you. And with that, let's get started and hear from our VAT experts who will be guiding us through today's sessions.
Thank you so much, Taylor. I mean, we're super happy to be here today. I think this webinar has been a long time coming because we've been having a few conversations with our US clients for the past few months. So we thought like this webinar would make total sense, specifically for the US market. So starting off with a conversation. So if I was having a one-to-one conversation with you, I would start saying, you're selling a great product. You've done the hard work. You built the brand. You won the customers. You figured out all the operations. And now you're thinking, well, what about Europe? So I would say like 450 million consumers, one of the wealthiest markets in the world. And it's normal that you're thinking, how can I expand? So here's what I constantly say to US companies that plan to expand to Europe. So we need to target like the 4 key points, not to say problems, but really important points that you need to address before doing so. The first one would be figure out the logistics. So your logistics provider is many times advancing VAT payments on your behalf, and then of course charging a fee for that privilege. That's common, right? You see that on your invoices all the time. And with the right setup, we can just eliminate that cost. So we'll see that up front a little bit. The problem number 2 would be your European customers are abandoning your carts at the checkout. And it's not because of the price. It's because they see unexpected import duties, a 3-week delivery window. They go and buy from someone over there in Germany. It's common. The third problem, I would say, is you don't have an EU presence. So every time you ship, it's like a transatlantic delivery. So we're talking higher costs, slower delivery, lost deals to competitors who have already figured this out, that they need to be in Europe. And problem 4, as we see it, will be you're overpaying VAT or worse. You're entitled to a refund that was never claimed. And I would stop here on this point because I think it's very important, because we see this many companies that are either overpaying VAT or just sitting on a refund that was never claimed. I mean, I see this constantly in the first meetings when onboarding customers. The reality is that most countries do allow you to reclaim back VAT without the need to register. But the process is not, I will say, really user-friendly. So you're talking about strict deadlines, a lot of the documentation. It takes a lot of time to take your money back. And this is not a one-time thing. This will happen on every shipment that you're sending to Europe. So it can be a serious hit to your cash flow. And more often than not, you do receive questions from the tax authority, especially if it's that first time that you're requesting. It's so common to receive. So I would say many of our clients, before registering in Europe, would end up hiring external advisors to just get through the situation, to get the VAT claimed. And I would say these advisors, normally they work with a success fee. I would say the average market will be 30% of all the VAT that is recovered. So if we put this into perspective, we're talking 30 cents on every single dollar you were already owed. So for sure, there's a better way to organize this. So I actually just we were onboarding a client, just to give you an example. Onboarding a client, they had the same scheme. So they were using a logistic department, they were paying in advance the VAT to the customs and then recharging to the client. And okay, it seems natural, that makes sense. So I asked, how are you recovering the VAT? And I'm like, recovering VAT? He was like, yes, you need to receive a specific document. In this case, it was a UK, to be able to do it. And you don't need to pay it. You can claim the VAT back. And the client just didn't know. He was just paying the VAT and never getting it back. So as we can see, sometimes having that logistics, okay, it facilitates the process, but you don't have the full information. What do I need to claim the VAT back? Is there like any specific scheme that I can use to facilitate what I'm doing? And I think that's where we can add extreme value to the operations that you have right now. But now here's the good news, and that's exactly why we are here today. So we went through the issues, but now we can say that every single one of these problems can be solved. And when you solve them, you don't just cut costs, you create a genuine competitive edge. So you ship faster, you win more deals, and you turn what is like we call a tax burden into a cash flow advantage. And at the bottom of this slide, you see our 3 strategic moves. So if we're calling to European savvy US companies, like we call them in-house, they're already making. So we need to think about strategic VAT registration. So you need to choose carefully the country to enter Europe. Sometimes they do offer simplified compliance, better importation rules, less overhead. So this is a huge advantage, planning ahead, and we'll talk a little bit about that upfront in the webinar. Also, EU presence brings a huge competitive edge. I mean, warehousing inside Europe, and then you're able to ship like a local. Your customers get the order in days, not in weeks. Huge advantage. No customs surprises at their door. And that's the difference, I would say, between winning or losing repeated purchase. And then, of course, we mentioned already the VAT recovery, and that could be a full-on process on how you claim your VAT back. I think we had a good example recently, right, Pedro?
Yes, that's right, Anna. And hello to everyone on the webinar. Yeah, we had a client just a few days ago. We had a conversation with him, and he told us about a delay that he had in a delivery. And that delay cost him his customer. The customer was actually reliant on the supply to keep their production line active. And the delay was just a matter of 1-2 days, but the consequence was massive. And now imagine if the delay was reasons outside of your control, be it you had a difficulty in releasing the goods from customs, or something went wrong in one of the paperwork that you had to fill in. This is the change that we are seeing in the perspective of businesses. It's no longer a ship and forget world where as soon as you ship the goods, you do not care how the client receives them. Companies now, they don't want to lose more opportunities with it.
That's exactly right, Pedro. So I see there's like a big loss of opportunity when you're talking about companies that are not close geographically to their customers. So it's not for nothing that we were actually talking the other day that we see like an exponential increase in warehouse renting in the EU as business do recognize the value of staying close. And it's not for nothing that we see that many companies are coming to us because they're subscribing the Amazon Pan-Europe program, because proximity, customer experience, repeated sales, like they matter, they're everything. Well, to say, this isn't about tax that we're talking. This is about your margin, your growth rate, and your ability to compete. So let's dig in. I would say, like, looking at this, the first question that comes to mind is, how are you currently shipping to Europe? So, because the answer to this question is probably the single biggest factor in whether your customers come back for a second order. Because, I mean, this comes from experience. We do see this all the time. So that's where we collect the information that most US companies default to terms like ex-works, free carrier, or free on board. And on the surface, if you're just exporting, that makes sense, right? Like you just hand over the goods and that's no longer your problem and that's less risk for you. But well, here's what actually happens. Your buyer gets hit with unexpected import costs that, they didn't budget for. They get stuck in waiting at customs, the delivery takes longer than expectedly, and suddenly you look unreliable, even though the situation really wasn't your fault. You didn't have control over it. So if you look at the diagram at the top of this slide, you can see what we call the risk model. So you push on the complexity onto your customer and everything seems, something goes wrong in the process. And things do go wrong. Again, we see it every day. And it's your customer relationship that takes a huge hit. Now, if you look at the bottom, you have income terms like delivery at place and then delivery duty paid, giving you full control of the orders. Actually, with DDP, you control like the full entire journey. So the customer receives their order with zero surprises, no unexpected fees, no customs delay, just like, I would say, a great experience overall. And again, talking to our experience, I would say this is particularly seen when you're talking B2B. So if you have a European procurement manager that is choosing between you and a competitor, imagine that the competitor ships from DDP from a warehouse in Netherlands, and you're shipping free on board from New Jersey. Of course, he's going to choose the competitor. They don't care about the price. They care about the certainty. And like Pedro mentioned in the example that we just had, discounts because it has a huge impact on the day-to-day of a company. So to say that we do need a full control over the delivery process and to minimize the tax compliance burden. So moving on to the next slide. The reality is that there's like a massive market in the EU. I mean, just we alone, we handle more than 30 jurisdictions. So you can see the magnitude of this. So I would just emphasize that when you're choosing your entry points in the EU, this could be a significant advantage, like if you plan ahead. Once the planning is done, you just register in that country, you clear customs at one point, and then you're within the EU. And you can, get in the Netherlands and then just move around the products. You can say German, France, Italy. Imagine, think about like operationally, the impact that this has. You're not managing 27 different custom processes. You're managing one. Of course, you need to manage within Europe, but that's the whole different process, much simpler. So you just pick your entry points. And this matters because some countries do offer better VAT simplification schemes and preferential treatment for US companies. So then you just stock there and you ship. So you choose your country like really wisely and then with the right VAT registration, the right simplification scheme, you're not just solving a logistics problem. I think you're building like a structural cost advantage that compounds over time. So now, just to give myself a little bit of a pause, and because we also want to get to know our audience, we have polls, 3 polls actually, that will go on through the whole webinar because we want to get to know you. And the first one will be, have VAT or customs issues ever caused you to lose business opportunities in Europe? So we kindly ask you if you can participate, and then the results will show up. You'll see right on the right corner there, you'll see near the chat that you have like a poll. So we will kindly ask you if you could complete it.
And yes, we will just give just a 30-second pause, but then we will continue. The answers are, for one, if your shipments are held or returned, or 2, if I'm not losing any business, but I'm paying the excessive VAT, and then or 3, if it's a no answer, but you're still looking at it for potential growing risk. So now we will just continue on with the presentation. And thank you, Anna, for the introduction to this team.
Of course.
In the next slide that we have, we will talk a bit about what is VAT and how does it work. But don't worry to anyone, because this is not going to get too technical. So this is just a baseline for what are the advantages you can gain. So VAT just translates to value-added tax. This is a consumption tax. It exists in Europe and in other countries, and it's applied at every stage of the supply chain. So from the first supplier through second order manufacturers to distributors, retailers, and just finally ends into the final customer. The key point to know is at each stage, businesses are charging VAT on their sales and are reclaiming the VAT that they paid on the purchases. And the difference between these two flows, this is what you end up delivering or recovering from the tax office. It's the value added by your business to the supply chain. And ultimately, the tax falls on the final consumer. So VAT should not be a cost to businesses. Businesses act as the collectors of the task, so to say. Now, in practice, we all know it's not that simple. There are cases where in the VAT law, it explicitly tells you, your business is a VAT taxpayer here. But this is not the general rule. And we also have all those moments where we look at the VAT line on an invoice and we're saying, why am I paying this? Can I get a refund, or how do I get it? Where do I start? And all those questions, they have an answer. And usually it's a very straightforward one. But if you're in the US, usually this is not your worry. Specifically, if you are exporting goods to Europe, you're outside of this loop, outside of it. But this means you do not have the complete control over your customer's experience. You may have an importer, you may even have a distributor or transporter in between you and what is the customer of your products. And usually a lot of these cases are fine, but because you have to start somewhere. But this is where we want to change the perspective, because you can easily gain more control over your import, over the distribution of your products, control over the delivery time, control over costs, control more this experience with the customer. And of course, as you may see in the picture, like, you will be inside the loop now, but this is not a headache. This is an opportunity, because understanding how it fundamentally works, it affects pricing, it affects competitiveness. Critically, it affects cash flow management. But being part of this loop, yes, you're dealing with VAT, yes, you're dealing with the tax authority in the country, but due to recent changes, due to the trend of the VAT law in Europe, this is becoming easier every year for foreign businesses. So this is the core message. If you understand the VAT mechanics, across border transactions especially, you will minimize your risk and you will improve your liquidity. Now, it gets intricate because Europe, this is not one VAT zone, let's say, when it comes to compliance. Now, your first contact with VAT will most likely be your import with a subsequent local sale eventually, and you will see the various VAT rates. Because this means that each country is its own jurisdiction. And each of them, they play by slightly different rules. So we do not recommend you see at Europe as just one single block, because this is where strategically planning your operations becomes critically important. You're choosing where, how to register, what are the special schemes that are available. This is essential if you want to maintain liquidity, if you want to maintain a simple compliance. And this is where we're going to explore next. But before we just go there, we have just a second poll. And the second poll will be with a very quick question for you to answer, like, if you are currently importing goods in any countries, how many of them are. We're talking about specifically European Union, UK, Norway, Switzerland, Europe, the geographical Europe. We'll give you just a brief 30 seconds, and then we will move on to explain more deeply particular topics regarding European VAT.
I think we have an idea, right, Pedro? So we do have an average of US clients. So we do have our own average inside, but it will be good to see the people watching if they have any imports to any countries. And it's more or less than we expect, because we do already have our mindsets on a particular number there. So it'll be good.
Yes.
So, okay, while the poll gets entered, maybe we can go through, because we want to make sure that we're covering everything. I think in the next slide, it will be, look, the results. Yes, more than one country. So this is good. This is good to know for VAT, a win for VAT. So moving forward, so now we want to tackle, so specifically imports. When you import goods into Europe, most people assume that you have to pay VAT upfront at the border. But here's what most US companies don't know. Many European countries have an import VAT referral scheme. Under this scheme, you don't pay VAT at the moment of the import. That's right. So the payment is deferred to your next VAT return, meaning the VAT reporting obligation, meaning paperwork. And because you're also reclaiming the same import VAT, you offset, and net cash impact of the importation is actually zero. Again, like, you don't pay, it's just reporting on paper, and that will be it. Let's look at the table on this slide. So under the standard model, a typical model will be like, you import in January, and then $105,000 leaves your account immediately because you do have customs to pay, and then you wait until more or less June for your refund. And that's a 5-month cash flow hit on every single shipment. So let's look under the referral scheme. So you import in January as well. So nothing leaves your bank account. This is a difference, right? So by April, when the VAT return is filed, you just include the import VAT as payable and receivable, and they cancel each other out. So net impact, zero, like I said. Just, it's surprisingly, right? So it's like same goods, same market, same business, but just organized correctly, like we say. This is what we mean when we say that VAT can be like a cash flow advantage rather than a cost. You're not spending less, you're keeping your cash flow longer, moving faster, and you can invest your capital back into growth. So this is a conversation that we think that needs to happen strategically. So it's not about compliance headaches, not about European bureaucracy. It's like about real dollars and real cash flow and real competitive advantage. So of course, we've shown you the opportunity. We talked about Europe like geographically, one entry point, real cash flow advantage. I think like Europe is really worth it. But of course, like you cannot look at Europe the same way that you look at the US, because as Pedro mentioned, they do have variation of rules. There is complexity. So let's jump a little bit into that. So you do have complexity. So each state, they'll have their own VAT rates. Just the language alone can be a barrier. They have specific schemes, like we mentioned, some do have, some others don't. If you want to register, the documentation it's different. The VAT obligations that you need to file, they're certainly different. They have different periodicities and you need to keep track. So it takes dedication to make sure that everything is coherent. Of course, like, again, if you don't manage it correctly, it could unlock certain risks. So we're talking penalties and fines. If you decide to do this yourself, so you register and then you decide to do all the VAT reportings yourself, you can be talking about late filings. So if you just miss one tick on a box, a specific VAT return, because you don't understand a word of Greek or Polish, you can have penalties and fines. You know, there are variations. The forms can change, miscalculations. So you will be served with penalties and fines. And I say, especially to sales teams, like, and they laugh at me, but this is true. Like clients, worse than penalties and fines, they hate full tax inspections, of course. Who loves them? So if something goes wrong, it can trigger questions from the tax authorities. And, you know, one question can lead to questions from a specific year and then blow up into a full tax audit. So we want to avoid this because it's so time consuming for you that we want to avoid it all around. Of course, you can have cash flow problems. The fact that you don't know the important deferment schemes in a specific country, you don't know the calculations, you know, like the VAT refunds, maybe you don't know how to claim them back, but you do have that possibility where you register. It can have cash flow problems. And I think this is a key point when we're talking to directors, CFOs, because this impacts the day-to-day of the company. And then, of course, keeping internal resources, just the knowledge alone, making sure you have the specific software, the training. It's a cost that I think you can also avoid. So now we're going into our third poll. How many service providers in Europe do you have? I think this will also be interesting to know because, you know, we see companies more and more going to like a centralized way of dealing with VAT. You want to make sure that you don't have one in Germany, one in Spain. You would have like a single person doing everything. I think it simplifies a lot the process, but let's see the results.
Yes, and the results of this poll are also very interesting to realize the impact of having several service providers with different working methods, different deadlines that they want us to fulfill, and not having everything centralized at one point. So we will just give you 10 more seconds. And then we will move on to the rest of the presentation. So I think we can share the results now. Yeah, we have the one result of engaging with 2 or more providers in Europe. It's a normal occurrence. Yes, we bring also here today an example, a real life example from an American client of Leighton. So they had manufacturing in the United States and in Mexico, from where they export to their European customers. And they actually came to us at the start of their journey, let's say, because they had a vision. They wanted to distributing directly to several of their customers, but they weren't sure what was the best way to optimize their operations, and how should the VT be structured, and what would be the planning here. After consultation with us, they actually decided, well, we will start importing directly, but only on a few select countries. And it made perfect sense from an operational perspective. What ended up happening was, now after all the VT registrations, the day-to-day VT compliance started. And if they tried to tackle everything internally, they would need a team just responsible for gathering, reviewing all the data, preparing the periodic VT obligations in each country, likely with support from local agents, and their management would be dedicated to their tax compliance topics. And you can surely imagine, like, if you're dealing with 5 different sets of VT rules in different languages, each with a periodic changes, this team we're estimating is not that big, but just one person leaving, and it's a rush for a timely replacement. So this is what we want trying to say to everyone here in the webinar, is that if you're not internally aligned, if you're not prepared, it will become difficult to manage without a full centralized support. Your complexity is growing, risk is increasing, and you don't want to make it too expensive. But what you're telling you today is that managing effectively, it has a secret, and it starts at the very beginning. And reflecting on our experience with clients, different sizes, different industries, all the common errors, the difficulties, the obstacles that companies face, we arrive at what we consider the 4 disciplines for VT excellence: proactive vision, strategic planning, a centralized management, and a continuous monitoring. Well, the name proactive vision, it makes clear what we're pointing out. It's just anticipating the impact. In this case, the tax implications of your business decisions. I can see everyone already asking me, like, okay, but what that does actually mean, in practice. In our experience, this is the point where you're examining your business model and you're anticipating the needs and risks before you do any movement of goods, before you work or open any warehouse, before you even sign any contract. It can be summarized in a few questions. Where will the goods be? For how long? Who will own them? When will the sale occur? Do we need a local registration depending on the sale? If within your company you're doing these questions, your departments are doing these questions, you're doing proactive management for your VT affairs. It's as simple as that. And this goes to the second pillar, which we mentioned repeatedly in this webinar, which is to think strategically. It's just not about anticipating registrations. It's about, from the start, you identify what are the countries that has the best advantages for you. And, you're looking into the European Union, and there's a lot of countries. Your first question can be, well, who has import VT deferment scheme, as we presented? Because if one country doesn't have, the country right next door can have it. And we mean right next door, because there's a lot of countries in the European Union. But for all of this to work, we need a centralized management, because we need every department to not act independently, to not share information or share information a bit too late, is to have a structure. In other words, a single point of oversight that has a unified policy and has a centralized process where you can approve changes, you can approve transactions, you can approve exceptions. Because this reduces ambiguity and it makes your tax compliance much more robust. And finally, we have a fourth pillar, which is the ongoing monitoring. And again, there's not a lot to say about this, because you know it. The tax environment is just constantly evolving. You have initiatives such as VAT in the European Union that comes with new requirements for e-invoicing, for e-reporting. These changes, they will impact any business operating in Europe. So if you're starting operations in Europe and you're not keeping up with the updates, you will quickly find yourself in a difficult position. This is because VAT management just requires active monitoring. You have to ensure your team communicates, you keep track of the new regulations, just assess, like, do we have the tools needed for this? And ultimately, our message is clear at the end of this. We just want businesses to move from a reactive scenario where they're discovering problems and they're reacting to them, trying to solve them, and change this into a model where they have complete control and complete overview over their VAT management. And after so many common problems, so many issues, we developed a 360-degree approach, an holistic approach, what we call the Layton approach. And I will let my colleague Anna just give a short presentation of our methodology.
Thanks, Pedro. We don't have that much time, so I'll move fast. So Taylor already presented Layton. Of course, it's worth mentioning that Layton is a global partner, so a consultancy firm that has over 20 years of experience and has now developed a centralized hub for all VAT matters. So I think this is worth mentioning, because all the expertise just in one place, I think that's valuable for companies. Layton has a global presence, so you'll see on the right corner of the screen all the presence that we have, Europe, non-Europe. So this weighs a lot when you're choosing the right partner. Our services, we developed that to cover all VAT related. So if you want to register in a EU country, all the consequent reportings, tax authorities communications. Pedro, we also mentioned the invoicing and real-time reporting, that it's now just the talk of the town at Europe. So that's something that we can assist as well. Advisory, we do EU and non-EU. So any question that you have, we are able to assist. And also VAT registration. So if you decide you no longer will be operating in a specific country, we can help with that process as well and advise how you can do it, when you can do it, what's the easiest way. So I think we do cover it all, but if you have any question or any other service that you would like us to check, I would strongly recommend that you book a meeting with us, and we'll for sure be able to help you. The stages of our journey, the idea that we created the service was to make sure that you were focusing on your business. So you'll just have two moments here. You need to provide us information and data, and we can take the full load of your shoulders and take care of all the process, so you can focus on what matters. And why Layton? I'll take a little bit longer here, because this also matters a lot. We make sure that we provide good client support. So we currently have a senior staff to be able to provide you with the best VAT service that we can. We make sure that we respond as soon as possible. I would say like maximum would be 48 hours. So we do acknowledge that client support nowadays, everything is so fast that we want to make sure that we are really there for you. Also, like we have a strategic focus We want to make sure that we cover all the services that we can have to cover everything that you need in just one partner. And then also we have a strategic, proactive vision of the risk. So we want to make sure that we receive all the data from your side. It's run through a platform that I'll talk a little bit more about, but also because we don't rely just on platforms, we do have a 4I policy. So VAT experts will be looking at all the data, all your questions. So, and you'll have that support on your day-to-day, because again, we want to make sure they have a good customer experience. Like we mentioned at the beginning, customer experience matters. So we're also taking that same advice for us. So Taxi, this was a platform that was developed in-house. It was developed by VAT experts, not just really good technically, but we wanted to make sure that it was super user-friendly. So it will look really good and simple and easy to use on the outside, but on the backstage, it's very VAT technical. So I think it's the best of both worlds, where you can use and it will be simple. Make sure not to forget any deadline. Make sure to view all your obligations, use it as storage. And then on the other side, you will have your VAT expert guide that will take a look at everything. But I would say, like, because we still want to have questions, time for questions, and I see already some coming up. Book a demo with us. We can show you Taxi. So you have the button, book a meeting. I would strongly recommend that you do. Taylor, I'll pass the word on to you now.
Perfect. Thank you so much, Anna and Pedro, for presenting today. We've already had a few questions start to come in, so I'll start by reading off the first one, which is, I believe my first customers will be in Germany. Should I just import in Germany, or should I look into another country? Wouldn't it be more expensive? What are the benefits?
Thank you, Taylor. I can take this question. It's a smart question, actually. We're thinking more strategically before you do start the operations. Yes, as you mentioned, if the first customers are in Germany, it seems logical, just import directly in Germany. It's where the sale will occur. It's the simplest decision. But you have to remember that sending goods cross-border in the European Union, they do not have any extra regulations or any other impact for you. It's a free movement at that point. So you have to consider other factors. Like, we're not going to solve the question here, but you have to immediately think, like, do you in Germany have the import VAT deferment scheme? Because if you do not have it, it's already a consideration for you, because this will have impacts in the cash flow, depending on your volume of trade. This is just one of the things that you have to think about at this point. But this is a message, for all the businesses. It's just this. There are multiple factors. VAT is one of them.
Perfect. Thank you. Our second question is, does VAT registration in a country mean we are also setting up or registering in a local country?
Sorry, can you repeat that, Taylor?
Yes. So it's, does VAT registration in a country mean we are also setting up, registering in a local country?
So I think the question goes to like permanent establishment issues. So you can have a VAT registration and you don't have staff over there, you don't have offices. It's just a simple VAT number. Of course, you'll have your VAT obligation, but much simpler in case you have like an office or employees there. So we can surely help with all of that.
Perfect. Are there any more questions today?
I think we just ran out of time.
Okay, perfect. Well, thank you so much to everyone who joined us. We really appreciate you taking the time to listen to all of this great content on VAT. If you have any additional questions, don't hesitate to book a meeting with us directly. We'd love to speak with you more and answer anything that's come to mind after this webinar. as I said before, we will be sending out the recording. So keep an eye out for that and have a great rest of your day.
Thank you, everyone. Thank you. It was a pleasure.